selling high leverage. Like, I can name one in certain pairs, 1 to 3,000, as I said. I saw a video last night about some guy selling 1 to 500. And the thing is, I tell students, you don't need high leverage. I mean, high leverage for a retail trader, all it does is allow you to run a whole lot of bad trades in parallel, and then blow up your account. So I mean, as a profession, every time I've traded professionally, it's been 1-to-1. There's been no leverage, because we understand risk management. We know what we're trading. We don't overload it. In fact, I was actually trading once years ago with him, and I realized there was actually negative leverage. They said it was 4 to 3. It was actually 3 to 4. We're actually trading less than the dollar. It was crazy. So I don't know how that worked out, but how the broker set that up. But a lot of times, as a broker, Michael, leverage can be a dangerous thing or a helpful thing. To most retail traders, it can be dangerous. And again, I tell clients, if you see a broker trying to sell you 1 to 3,000, he's not trying to help you trade. He's trying to take your money. As simple as that.
Yeah. Well, but I definitely get it, and I've been in the business almost for like 10, 12 years now, and I've seen leverage, and then I've seen no leverage, and then like when we try and find the middle ground, everybody wants the leverage. So we're working on our license in Vanuatu, which is an offshore entity, and we're looking to give some higher leverage to clients over there, but we're still going to run a fair game and not mess with anything. But you just got to give the clients what they're asking for is really what I'm finding, and a lot of people are asking for it, whether it's for their own good or not. We just want to serve the client, give them what they're looking for. But yes, leverage is more or less a double-edged sword, and I've seen more people stab themselves with that sword than win. So. And like you said, with using very little leverage or no leverage, there's enough movement in the markets. It's about being patient and just capturing it. Unless you're like a high frequency firm that's trading like in multiple directions and thousands of times a day, like from a lot of studies I've seen, that's really where a lot of the successful trading programs are, is from having trades going in multiple directions and clipping little bits here and there, and always being in the market. And then just a slow and steady trader is having some positions in the market using low leverage and just waiting for the pips to come, the points to come, and that's where the money's at. And right now with cryptos, when when they can move such high percentages in a day. That a lot of people are attracted to that because they're, I made 5% today, I'm going to make 10% tomorrow, and if you're going to do that on leverage, that's kind of scary as well. So
well, that's why the regulators have put very low leverage on crypto for those brokers, unless you're an exchange. Obviously, you're buying it 1-to-1, but that's
yeah. Well, I guess that's like the kind of the attractive part on that side, on the cryptos, because we're about to launch some cryptos 1 to 5 leverage, and so it's not crazy, but it just allows you to, instead of paying the whole 50,000 for a Bitcoin, or maybe it's 30,000 or 35,000 today, but it's it's you can get in there with 1 to 5,000 and then experience some of that up or downside and make a few bucks on that. So that's the interesting part for that. But I get it. You want to limit that leverage because it would be wild, especially like trying to cover those positions with like 1 to 500, 1 to 200 leverage, 1 to 100 leverage, and on a 10%, 20% move on a daily basis. Companies would be going bust daily trying to cover that.
Yep.